Everybody, Valerie Zammitti of Zammitti Law, where we provide peace of mind to families through estate planning, elder law, and probate matters. Today, we're going to talk about New York's estate tax. Before we get there, however, if you have any questions about this topic or anything estate planning and probate related, you can reach out to us for a free conversation at yourplanningattorney.com. That's yourplanningattorney.com. Now, of course, anytime we have a New York client who passes, we have to make sure that there's no New York estate tax filing requirement. Of course, way before we get there and we're doing our planning piece, we want to make sure that we are accounting for the potential of such type of tax. And so you should know that in general, even if you're watching this and you're not from New York, there are about 15 states across the country that do have a state estate tax. Say that 10 times fast. Anyhow, New York's estate tax currently, 2022, is about $6 million. We're going to use that rounded number for today's purposes. Now, that doesn't apply to a lot of folks, but it could. And so we want to address it here to see whether or not this information resonates with you. Now, you should know that that $6 million exemption does not double automatically if you're married. The federal estate tax provides some fluency between spouses and using their exemption, but New York does not. So you have to make sure that your estate plan accounts for that if your joint assets exceeds $6 million, today's dollars. That, of course, is going to continue to go up based on inflation. It could go down if state law changes, but that's where we are today. Now, the biggest key when it comes to New York estate tax is what we call the cliff. I know, strange name, but it'll make sense once I explain it. So New York, when they did increase their exemption from 1 million all the way up to 5 million and scheduled up to meet the federal government and has increased since then, they changed the law a little bit further to include what they call the estate tax cliff. What it means is this: if you have an estate at your passing that is worth 105% of the exemption that year, then you lose the entire exemption and the whole thing is taxed. So that's pretty wild. To give you a quick math example, if the exemption is $6 million, as it is this year, and you are worth $6.3 million, that's 105% of the exemption. Your family gets no benefit from the $6 million exemption, and the whole 6.3 is going to be taxed. Now, the cap rate is 16, so that could be upwards of maybe $1 million. That's a big hit for the family when you think about it. And so we need to make sure when we're doing our estate planning that we're thinking about these parameters and how we need to establish our estate plan to minimize, if not eliminate, these taxes completely. Make sure your estate planning attorney is familiar with these factors and can answer questions if you are in that general net worth. As a reminder, if you have any questions about this or anything estate planning or probate related, you can reach out to us for a free conversation at yourplanningattorney.com. That's yourplanningattorney.com. Thank you so much for watching, and if you found this information useful, please share, like, and subscribe where appropriate so you and others don't miss out. Again, Valerie Zammitti of Zammitti Law, where we provide peace of mind to families through estate planning, elder law, and probate matters. Have a good one.